Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 28th of November 2021. Let's discuss an important aspect of physical gold ownership. What are the available options for storing physical gold and what are the pros and cons of each of these? Now note that here I'm only discussing direct segregated ownership of specific gold coins or bars. I'm not talking about unallocated or paper ownership here, okay? So you might store it at home, whether that may be on land or sea. And external storage options include vaults in banks, private vaults, or specific bullion storage facilities. So let's discuss the pros and cons of each of these. Aside from the cost of whatever the container you're placing it in, there are no ongoing storage fees if you store it at home. So yeah, it's free. Of course, physical access is going to be easy and instant. And it is the purest form of ownership since there are no counterparties involved at all. It also provides the greatest amount of privacy. So there are lots of pros. The problem, of course, is that it is very, very risky. The biggest risk, of course, is theft, but then you've also got other things like fire and so on, which can be an issue. Note that your home insurance won't necessarily cover such losses, and if it does, then the coverage is often partial and often it's up to a capped level. Overall, this option is not practical for large amounts of ounces here. What about bank vault storage? And so by this I mean a safety deposit box in a bank. Well, that would of course have a good level of security. But I can't actually think of any other pros for this option. What about the cons? Well, firstly, your physical presence is required to access it. So you need to be able to get to the location easily. Now, in the past, that might have been much of an issue, really. But of course, things have changed. Now, over here, most people have been banned from entering and leaving the main city by any route for months now. And so if you needed to physically access your property in another city, or say you lived in a rural area and stored it in the city, well, tough luck. Going forwards, it's looking like that they're going to make you show your digital permission just to drive in and out of the city. Insurance isn't covered in the storage fee, and in the USA it also isn't covered by the FDIC. It might be possible to purchase insurance separately though. If the bank's closed for whatever reason, you will not have access. And remember that bank closures can occur without warning. Safety deposit boxes are subject to bail-in. Your money can suddenly become the bank's money. What about non-bank private safety deposit boxes? Of course, this would avoid some of the problems associated with bank vaults. It also provides a good level of privacy compared to the other options. It's also relatively cheap compared to, say, other specific bullion storage options, which we'll talk about. Here you usually just pay a fixed amount for a particular sized box. Again, the problem is that your physical presence is required to access it. And I've already discussed the problems with that. Because it's left the chain of custody, liquidity can be a bit of an issue. So in order to liquidate it, you need to go and get it, transport it to whoever you're going to sell it to, and they will want to assay it before accepting it. Look, it's not a big deal, but it is still something that you need to consider. I wouldn't have considered denial of access an issue until recent events. So here, during the highest restrictions levels, which lasted a couple of months, there was zero access to private safety deposit boxes. Now note that such restrictions can be instituted at any time and without warning. So the next thing that's likely to be introduced, I think here, is the need for digital permission to show your you-know-what status in order to access your box. Of course, the introduction of such measures would completely flush privacy down the toilet. Getting a specialist bullion storage facility to store your segregated metal is, of course, going to be very secure. These facilities also make it very quick and easy to buy and sell your metals. And this can all be done remotely from anywhere in the world. Well, at least for now anyway. The downside is that it is the more expensive option, and the fees are usually charged as a percentage of the value of the metal stored. You are, of course, involving a counterparty in holding your assets. So for this option, you want to be sure that it's a reputable outfit. And you also want to go with a company that doesn't use leverage as part of its dealings. Jurisdiction is also an important factor to consider if you're storing in a country other than your own. But I've got to say, recently, it's been getting harder and harder to decide what is a good jurisdiction. So look, I'll just give you an example. Over here, it was decided that farmland can effectively be confiscated without compensation if it's considered a significant natural area. And that's actually been used. So, you know, if you're looking at buying farmland over here, make sure it's one ugly piece of land. In Australia, there's actually a law in place that allows for the confiscation of gold. Now, it hasn't actually been used yet, but it can be used at any time because it's there. So jurisdiction is important, but look, it's not so easy to work out. New laws are being introduced under the radar all the time. In conclusion, your storage decisions will depend on how many ounces you actually have. And everyone's going to have different preferences. And the thing is, though, the factors that you need to consider are the level of security, your accessibility, your physical location, and your liquidity needs and requirements. Next up, the market update. Let's start with the DXY, and this is on the daily scale. And for those of you who didn't watch last week's video, if you watch that, you'll see how I came about to draw these lines. And I was talking about this top line being the potential next resistance level for a potential turnaround. And wow, isn't that pretty good? I was quite impressed with that. It hit it and got rejected down again. Now, I thought it was quite interesting. On Friday, of course, there was a bit of stock market hysteria to the downside, I guess, because of the Optimus Prime variant, or whatever they want to call it. Anyway, normally when you get what was actually quite a big one-day decline relative to certainly the past year or so anyway, normally you'd expect people to run to the dollar, but that didn't happen. So we got a big drop down here in the dollar index. Anyone know why that is? I don't know. Anyway, so I think for now we're going to be somewhere within this range before it picks a direction. I'm still thinking that that direction is going to be to the downside, but look, I don't know. I'm not Mystic Meg. I had someone last week trying to get me to admit that I'm wrong about this and that happens quite a bit. The thing is, those of you who've been watching for a while now will know that pretty much every video I'm wrong on something. Okay, and I don't have a problem with that. And there's a couple of videos where I've explained why I don't have a problem with that. So, yeah. Anyway, yeah. So that's the DXY for now. So I think this is the range that we want to be watching. I think if we break back and close below this red line, then I think there's going to be a lot more downside on the way. But of course, if we break sustainably above this line, of course, the opposite is going to be true. Okay. So gold, now this is on the weekly scale. And of course, yeah, we had a nasty red candle last week. But I mean, if you just stand back and look at this, it doesn't look particularly nasty, I don't think. So the other interesting thing is if we look at the volume, throughout this whole kind of sideways movement, volume's been going down, and this sell-off was actually kind of around average volumes there. It wasn't a high volume sell-off there. So I don't know. I don't think I'm getting overly excited about you know, bearishness with this. I mean, of course, look, I can be wrong. Let's move on to the next chart, and I'll show you what I'm talking about. So we had broken through this downsloping trend line, but I was wondering if it would bounce off as a retest and come back up, but it didn't. This was the nasty red slap down over here, and kind of price kind of stabilized, and it was looking quite good for a little while because price was going up, but then of course Friday happened and this got slapped down again. So that's not the best looking candle, and so we're back in this trading range again. This is that sideways movement, and we were waiting for it to pick a direction. We thought it had picked a direction, but look, again, we're still making higher lows, you know. I think if we break this low at 1760, then we're looking at problems, and I think I'll be very concerned if we go below 1720, yeah. And of course, this is our major line here at around 1680 there. And look, you know, we mustn't be blind to all the possibilities. Of course, yeah, this can plummet and so on. But I think, yeah, there is perhaps a little bit more downside, but we've all got a bias in one direction, because at the end of the day, you've got to pick a direction. So I'm still thinking that this will turn around at some point. I just don't know when. I've still got the feeling there's a little bit more downside to come before that happens, though. Let's see. Now, this is that gold price in the world currency unit that I explained a bit more about in last week's show. And I was just having another look at it, and I just came across something interesting. So if you'll see here, there was a large gap over here, and we had a large gap over here. And I thought, well, how common is it to get gaps in this? And I looked back for the last, I think, 3 years, and I couldn't really see any gaps. So that's interesting, because of course this gap closed over here before commencing its kind of downwards move here. Here, this gap hasn't quite closed. So I think that's going to need to close, which would fit with that idea that we've got a little bit more downside to go. Now, another possibility is that this drops. So of course, we've got to think, well, how far can it drop and we can still be bullish? So one option is to join these lows here, and that brings us this trend line. So, you know, that's the potential there. And, you know, you might have some support because of this price action here, maybe. I mean, another possibility is it could go much further and drop to here. What you don't want is to make a new kind of lower low. So if it goes below here, then you're starting to get into trouble over there. So that might be something to look at as well. But yeah, so I just thought the whole gap thing was quite interesting, particularly on, you know, such a kind of large index, I guess. Okay, silver priced in US dollars on the day scale now. So silver, I haven't got much to say here. It's very, silver is always really, really difficult. You know, it just completely messes with your head. So I'm not sure how much help I can be to you with silver. We have made a lower low over here, which isn't great. And look, if we break this support area over here, so we're talking into the 22s at some point. If we break below that, there's a lot of thin air here. So, you know, I can't rule that out, okay? All of these things are possible. And because there's just not much price action over there. So yeah, just beware. But yeah, I kind of tried to look for indicators and this and that, but it's pretty difficult with this one. So yeah, and of course, you know, look, this whole time price has been moving sideways, and when price is moving sideways, it's very difficult to you know, make any judgments. So let's see. It's a difficult one, that. And let's move on to the gold miners. So this is the GDX, and we're waiting for a break of this downtrend line, which we haven't got yet. With these gold miners, we haven't made a lower low yet. And I quite like this candle because it's got a nice lower wick here. But that doesn't mean that we can't get more of a drop here. What we don't want, I think, is to go below 30. I think if we go there, then potential to head lower, 28, even 26 is a possibility, okay? So again, you know, we've kind of been in this sideways trading range for quite some time, so we've got to wait for it to pick a direction. So yeah, look, the one of the things you'll find is that there are some weeks where you just don't know, and anything I say probably won't be all that helpful. But then there are other times where you can feel a bit more confident. You know, it's very, very variable. People expect you know, that you can feel confident all the time, and that's just not the case, you know. But there are some times where you just know, yeah, this has to be the low. There's a high probability that this is going to be a low or a high, you know. But other times you haven't got a clue what's going on here, and it's usually those times when things are moving sideways. So yeah, just one of those things. You've got to be realistic with the markets. And next we move to the SILJ, so that's the Silver Miners ETF. And interesting, because we've got that gap there, which kind of price moved down towards it, but it never really got to it even close yet. But now it just seems to be trying for that, so that maybe that's our area that we need to kind of aim for, which is kind of the, let's say, the mid to high 12s, potentially. But again, we've got a nice long lower wick there, which is something, I guess. Yeah. Anyway, yeah. So if you're looking for answers, not much help here. As you know, though, I'm overall bullish long on the bigger time scales, so these kind of movements don't worry me hugely. Anyway, for those who are looking for someone to be right all the time and to confidently know what's going on, apparently they've got loads of people like that on TikTok. They've got some people who can get you to earn $30,000 a month just from your bedroom using your mobile phone. Apparently it's really, really easy. Yeah. But yeah, I haven't got around to looking at those strategies lately. Anyway, that's it from me for this week. Now, yeah, weird things have been going on in terms of the comments and subs. One person said that they had been unsubscribed against their will twice, and so they've moved over to Odysee. So I'll put the link in the description if you do want to come to Odysee. I've had a couple of people whose comments have been removed. Not by me, they've just been removed. I don't know why. I don't think they said anything. There was one where on that video where I was joking and called Funny Money. One person had just written very innocently, yeah, that's just what I needed. And apparently that got deleted. I have no idea why. So, yeah, and even sometimes when I respond to people, that gets deleted. So, yeah, I don't know what's going on. Anyway, so I've got Odysee as an alternative. I haven't seen any problems with the comments so far, but look, Odysee is not quite as slick as this platform at this stage, but look, it's been developing. I've already noticed improvements over time. So if you're interested, then you can see me over there as well. Anyway, hope all's going well with you. We're having a lovely warm summer, thank goodness. That cheers things up somewhat. That's it from me. All the best. See you next week. Bye.